Palantir announced their Q2 2023 results. They met the revenue target as well as earnings per share estimates. As you can see on the screen, they made about $533 million of revenue, which represents about 13% year-over-year growth. The stock is up about 2.3% and it is currently trading at about $18.4. For the next quarter, Palantir is guiding for 16% year-over-year growth to make about $555 million of revenue. And for the full year of 2023, they're saying they can make about $2.21 billion of revenue, which represents 16% year-over-year growth again. Some of the Palantir investors did expect that they would give out some blowout guidance for the next quarter, but that did not happen. During Q2 of 2023, Palantir closed about 66 deals that are worth more than $1 million each. Out of these, 30 of them were at least $5 million and 18 of them are at least $10 million each. Palantir also highlighted their customer reviews for their AIP platform. Palantir has close to $3.1 billion of cash equivalents and short-term securities and no debt, so the balance sheet is in pristine condition. Let's quickly look at the income statement. Like I said before, they made about $533 billion of revenue in the most recent quarter. The gross profit is about $426 million, so that's about 80% gross margin. This is like Microsoft's gross margins. Look at the total operating expenses. They are about $416 million. So the operating income is about $10 million. When you notice the net income of $27 million, it looks strange, right? The operating income should be more than the net income, but in this case, it's the opposite. That's because they got interest income of $30 million because they have a lot of cash and they put that cash in the short-term bonds. In the absence of this interest income, they would still have made about $5 million of profit. So that's still GAAP profit. At the bottom of the screen, look at the crazy dilution. They currently have about 2.278 billion outstanding shares, and a year ago they had 2.054 billion outstanding shares. That's about 11% dilution year over year, which is very significant. Let me now show you a hypothetical valuation of what it takes for Palantir to double from the current stock price of $18 in the coming 5 years with respect to fundamentals. For Palantir to go from $18 to $37 and double in the next 5 years, they have to grow their revenue by about 35% year over year for the next 4 years. Do remember that they are guiding for 16% year over year growth this year. So they have to get a lot of business next year and the years after to get this 35% year over year growth. At the moment, it looks like it's very, very optimistic projection, but we have to see how the AIP platform of Palantir will get them more and more projects in the coming quarters and years. With 35% growth, if you believe in it, they can make about $7.4 billion of revenue in 2027. Since Palantir has 80% gross margins like Microsoft, they can definitely achieve 30% net profit margin if they are disciplined with their operating expenses. So with that, they can make about $2.2 billion of net income in 2027. For a company that's growing in the 35% year over year and 30% net profit margin, people would pay about 32.5 multiple in general, but I'm going to assign a premium multiple of 45 for Palantir, with which this company would be worth about $100 billion in 2027. With respect to the number of outstanding shares, currently Palantir has about 2.27 billion outstanding shares. Remember that they diluted us by 10% year over year. I'm only assuming 4% dilution in the coming quarters because they announced a $1 billion buyback. Even though this $1 billion sounds a lot, based on their market cap close to $40 billion, that $1 billion can only buy back 2.5% of the company. So that's not too significant. Palantir still gives a lot of stock-based compensation. This year, for example, they're giving close to $500 million. So 4% dilution is actually very optimistic. They would dilute us more, but I'm assuming 4% dilution, with which they will have about 2.7 billion outstanding shares in 2027. When I divide the $100 billion market cap with 2.7 billion outstanding shares, I get a stock price of about $37 in 2027. Since the current stock price is about $18, this $37 price target in 2027 represents 100% gain in 5 years, which is attractive. But most importantly, for this to happen, the company has to grow its revenue by 35% year over year for the next 4 years, and they are nowhere near that. This year they're saying they can grow about 16% year over year, right? And the assumed net profit margin of 30% is to be valid. I think that is achievable in the next 4 to 5 years if they can control their operating expenses. I highly doubt if people would pay 45 multiple in 2027, but it can happen. So if you believe in this 35% revenue growth rate, 30% net profit margin, 45 multiple and only 4% dilution, the stock will 2x from now. On the other hand, if you think these are very optimistic projections, then the returns from Palantir stock, if bought at $18, would be very substandard. In addition, we need to understand that Palantir is competing with the likes of OpenAI, Microsoft, and Google, and a lot of open source platforms for the same AI market. It would be very interesting to see how Palantir is going to gain market share from these formidable competitors. In full disclosure, I do own Palantir shares at a cost basis of under $8, but I would not be adding at price above $12. Let me know your thoughts in the comments. Thank you so much for watching.